Dave, always a pleasure. Thank you. Welcome everyone. Nice to see all of you here. Pretty good showing today. I'm happy with that. My name is Rahul. I'm from TradingWins. I work with a fellow that some of you might know named Vince Vora. I've been doing online presentations and teaching since 2014. I'll give you a little bit of my background and how I ended up in this wonderful game here. I graduated as a finance professional and decided that it would be a fantastic idea to take my winning personality into the accounting business. And I did exactly that. I became a CPA started in 1998. And one of the benefits of going through the CPA training was that it really allowed me as an auditor to go into businesses and see exactly what makes them tick. And I was sometimes shocked, bewildered, surprised by the concepts that people would take and turn them into businesses, taking things like, we just make bottle caps. I was like, oh, you make bottles and caps? No. We just make caps for bottles. That's all we do. We have a $20 million a year business based on that. I was like, that's amazing. The other thing that was more interesting from a market perspective, and all of you, I'm sure, have experienced this if you've sat through any earnings announcements, is that management has this wonderful ability to dress up the financial statements to some extent. And a lot of the times, the top line number, revenue, sales, gross profit, etc., certainly isn't as telling as what's in the notes. And the notes is really where management can massage the numbers and make them look pretty much the way they want. So that allowed me to start the fundamental analysis of what I was doing in trading. And back in those days, so if you recall, 1998, 99 were the heydays of the dot-com boom. So Intel, Qualcomm, Cisco, JDS Uniphase, Nortel. If you remember any of those names in trading, any of those, it was a wild west. You'd get up in the morning, JDS Uniphase is up 30%, Cisco was up 20%. You have eBay was another big one, Yahoo. And if you're coming into the market at that time, all of a sudden your expectation of what the market should do is completely different than what Warren Buffett had been doing for 30 years prior to that. So I got a little bit spoiled. And of course, at that time, the options industry isn't what it is today, but it was really just starting to grow. And as I would look at the option quotes in the Wall Street Journal, and that's where you would go for those things, there wasn't a lot of online access for those things at that time. So I'm looking at it the next day, and boy, did I think, oh, it's easy money. Look at this, you don't even have to buy the stock, you just buy the options. When it goes into money, why has nobody figured out this infinite money glitch? Well, I didn't even know what I didn't know at the time, and that if you think trading stock is hard, try trading options without having the knowledge of how it works. And I managed to lose quite a bit of money very, very quickly, which in hindsight is probably the best thing that could have happened to me, because nothing teaches you about the markets and about what you need to learn better than losing money. Because when it's hard-earned money, and I was 22, 23 at the time, and I think I lost maybe $10,000, which to me at the time was a whole lot of money. So that's when I said, nah, I want to really learn about this. I want to see what I can do. And coming from a CPA background, you're analytical. The downside of coming from a CPA background is you're highly risk averse. And the market sometimes rewards you for taking risk. So what I wanted to do was I wanted to bring all of that together and find a way that I could take calculated risk, define my risk at the beginning of a trade, and try to make my trading as mechanical as possible. Before we get started, just a reminder that this is not financial advice. I'm not a financial advisor. I have a trading system. I have a trading style that I'm going to share with you today. You can easily duplicate it, apply it to your trading style. I'm going to show you exactly what it's done for me and exactly how I trade it with my style. Just because I've had success in the past doesn't mean that these results will continue. As I mentioned, that's me. Velocity system. Vince's system is called the Victory system, and teaching and coaching since 2012. So I had the chance to meet my business partner, Vince, in 2012, and he was trading with technicals at the time. He took a serious loss based on fundamental trading early on in his career, and he put fundamentals on the back burner and focused more on the technicals and price action. So he was kind enough to take me under his wing and teach me about the technicals. I was able to put that together with the fundamentals and the understanding of financials and come up with what we think is a pretty darn good trading system, or at least it's been good for us. And I'm going to show you exactly how that is. So let me move this off to the side, and hopefully you can still see my screen that has a chart of Micron on here. And this has been the performance of the system over the last year or so. So you can see our first trade on this one that we've documented. This is all documented for our subscribers, and it's all documented through our Microsoft Teams channel. You can see whenever there is a trade idea, we post it here. There was HST. Vince has posted monthly charts. We had a trade recently on Walmart. That did not work, and I'm going to show you how that did not work. We had a trade on FITV, which worked really well. And these are all posted here, then they end up on the spreadsheet here. So just to go back, Corsair was the first of our trades that the system was developed and deployed last year. So it was around this time last year, and we were just playing around with it. And this was our first trade. It was a Corsair. You can see I have an affinity for call debit spreads. Going back to the risk aversion that I have, I find that call debit spreads on long position give me just enough upside with a very, very highly defined downside. And what I like about the call debit spreads is that they're highly, highly forgiving. Now, you get a gap in the market, of course, anything can happen, and the call debit spread sort of protects you against that as well. You can only lose what you're putting in. But our strategies are varied. So there's a call debit spread. We have a buy right here, calendar spread. We have just straight calls, just straight puts, which we had on the VIX here. That turned out to be a really great trade. And this trade, I think we were in for only one day. This was on a Friday, and we were out on the following Monday with a big pop in the market. So this was highly speculative, and this is not what was expected. We expected a slow, steady grind up as the VIX was grinding down. But this was a gift. We take that gift and move on with that next trade. More and more over the years, trading for me has become analytical, and it's not any longer about, am I long, am I short, do I want to buy shares, do I want to short shares, because the number of instruments that are available for you to put on an opinion in the market is astounding. And I want to use every single one, or as many of those options that are available to me, to put on a trade that in the distribution of probabilities is going to give me the highest chance of success. Okay, so if it's a position that looks like it would be a long position, and the call options on that position are underpriced, and then when I say underpriced, I mean the implied volatility is dampened, the overall market volatility is dampened. Even if it's not a perfect A+ setup to the long side, I'm willing to take a shot at it, because if it does become an A+ setup, I'll have an asymmetric gain on that position. So generally, I'm looking for a 1 to 3 kind of risk reward. So if the trade doesn't go my way, I'll lose 1. If it does go my way, I make 3, 4, 5, etc. So you can see we had a really, really, really good year. Our overall record for the year was 51-9. This is all documented in real time on our Teams channel. And if you add up the total gains, including the red ones that are the losses, we had about 33, almost 3,400% gains. And this is, again, all documented in real time. And the strategies, some of them can be complex, but most of them are pretty simple. Most of them is just buying calls. There is some magic in the adjustments that we make, and you can see we get into a trade. For example, we really hammered silver starting from 30, or SLV starting from 30 last year, and took it all the way up to 107 or so. We still currently have a position at the 100-110 call debit spread that's expiring in June. So holding on to that position, I am bullish on silver, and there really aren't any adjustments needed right now. Maybe on OPEX that's coming up next Friday. Maybe I move the strikes and expiries around a little bit. So that's something that I'd consider. We've taken profit on SLV, I want to say at least 4 or 5 times during the last 9 months or so. So bringing our presentation back in, with the new tools that are available through AI and the ability for you to backtest these strategies, there's no reason why you should be questioning why a strategy works or doesn't. It either works or it doesn't work historically. Now, what happens in the future, that's a different thing, but all we can go on is how it's done historically. Now, I am working on stuff that is not only bringing in AI into the chart patterns, so similar chart patterns. There's, if you're all familiar with statistics or backtesting, you'll know KNN, which is the nearest neighbor. So when we look at something like this on Micron, for example, this long position here, what TradingView, this is the TradingView platform, what TradingView will allow you to do, or allow us to do, is to look back at the last 15, 10, 5, whatever you want to define, situations where the entry looked similar to this. It will then make an assessment. Let's say the number that we're choosing is 15, which for me is a comfortable number looking back on this. If 10 out of those 15 were successful, it will simply paste a 66% success rate right below that arrow. And we've already done that for our members. I'm showing you the basic strategy, the enhancements that we're making enhancements on it on a weekly basis. So that is what sort of AI has been able to do for us from a programming standpoint. The next real frontier here is machine learning. So machine learning would be, we've got a setup here. Is this even the right setup, or should this setup have come down here? How can we make this setup even better? So that's sort of the next thing that we're working on. But this is the basic strategy, and as promised, I'm not going to spend a lot of time on the presentation. You already know what is in the presentation. I'll just go through it quickly. Chasing entries, second guessing exits. One of the points that I made was I want to make the system as mechanical as possible, and you'll see exactly how I do that. Lagging indicator, we know all the problems. You can put 20 different indicators on your charts, and what I find is the only thing they manage to do is confuse you, because you're going to get conflicting indicators. One says long, one says not yet, one says short, one says almost. So my goal is to keep it as simple as possible. We're going to use basic indicators that are available on TradingView and just trade with those. You're going to need only one thing, which is an eye for support and resistance, and I'm going to show you how to get to that. Okay. System is basically 3 steps. Look and scan for long and short setups. We're going to use our EMA ribbon for that. We're going to assess support and resistance, and we're going to decide on a strategy: commons, options, futures, inverse. And that really is, I'm going to say, deciding on a strategy is probably just as important as looking for the longs and short setups. Okay, so let's put this aside now for the rest of the presentation. We won't need it. And I just want to make sure that there aren't any questions that that we're missing. Okay, if you do have questions or there are symbols that you would like me to review, I would be delighted to do that. Let's start with Micron, because this is a good example of what can happen when you're in a channel. So pretty self-explanatory here. The ribbon is a combination of moving averages, some oscillators, and a couple of other indicators that we're using just to gauge the overall trend. So this is a longer term trend following system. The backtesting that we did on this took us back about 10 years, and we looked at about 12,000 trades with this particular system. If you're trading it with just shares, you only want to be trading long on this system. If you're trading it with options, both long and short positions can be opportunistic. So there's our long, nothing wrong here. So let's start here, then I'm going to take you back, and because you're saying, oh geez, there's lots of ins and outs here, and how we're going to stay out of this. So let's look at our first entry here. Our long comes in on Micron on the 14th of May, okay? I make a simple assessment. Am I within 10% of the bottom of the ribbon? That is where my stop loss is. So it's at 96 to 83. It's about $13. It's a little bit more than I'd like, okay? I wait for price to do what it's gonna do, and I wait until I can get an entry that's within about 10% of the bottom of the ribbon. So at 93, 87, okay, now I'm there. I'm even here, I'm there as well if you want to take it on a bar that looks a little bit more convincing than a bar that closes at its low. And it's important, you should pay attention to the way the bars close. So in this case, it looks like we did, buyers were able to move this price up, but then we actually ended up closing near the low of the bar, and that's an important thing. What I have down here is simple volume, and what I have here is something that is a little bit more important to me. This is the cumulative volume delta. Okay, it's the CVD. So if you're trading this at home and want to put this on your chart, it's the CVD down here. I can't put it down there, but you get the idea. This basically speaks to what type of volume is this volume? Is this buyers? Is this sellers? Is this institutional buyers? Is this big sellers? So when you get a situation where the price is going up, but the cumulative volume is not going up, that's a reason for me to pause. So in this case here, if I were to even consider this trade, I would want to see a CVD that's at least positive. So the next day, the following day, we get all the way down here. And when I get a 3-bar pivot that looks like this, so when I get a 3-bar pivot that looks like this, and in this case, I'm in a bullish trend, there's a long there, I want to make sure that I'm within 10%. Now 10% is my personal risk tolerance. Yours could be 15, yours could be 20. It depends on how much risk you're willing to tolerate. So for me, 10% is the right number, and that's the number that's worked for me to get me these kind of returns. So I take this trade here on the 27th of May. And what do I do once I'm in that trade? Really not much. My close or my stop loss is still at the bottom of the ribbon, which turns officially bullish a couple of weeks later on the 11th of June. But along the way, what I'm doing is I'm taking profits. So as I'm up 5%, 7%, etc., I'm taking profits along the way. And that's, again, a very personal thing. An easy way for me to look at where profits should be taken are, I would just simply look at where we are, where we are with market maker pivot points. So there could be standard market maker pivots, which you can paint on your chart here, here, here. So you can see we quickly go from this level at 96 all the way up to 128. And if I'm trading this with, I think did we actually trade Micron? No, not in this recent series here. The way I would trade this here is with 90-day to expiry call debit spreads and do 100 to 110, 100 to 120. Now, one of the things you should know about my trading style is I don't like to sit through earnings because they can go in your favor or they can go wildly against you. And instead of me taking a risk on what it can do, I don't want to predict. I don't want to say I'm smarter than the market or I'm smarter than the people running these companies. I'm going to sit out earnings and look for another opportunity to get back in. So if a trade happens within about 10 days of earnings, I generally don't take it, and I'm generally out of the trade before earnings. So in this case, you can see Micron seems to disappoint, but then it continues to go up. This green line here, anyone want to guess what that green line is? So this is the 150-day simple moving average here. This is the old Stan Weinstein indicator if you're a student of trading history. This green line here is the 3 ATR. So if you go back and review trading literature and look at what strategies a lot of professional traders use for their stop losses, it's generally, or not generally, a lot of the times it's the 3 ATR. And you can see how well it behaves. So if you just trail the 3 ATR like I do, you get big moves up. I'm rolling options along the way. If you don't know what that is, don't worry about that. I'm taking profits along the way. And when I do get a close, I'm out. I'm out of that trade, and I consider getting back in on a trade like this. So at 232, down to 213, that's an acceptable level of risk, or if it's not, I could wait for it to come down a little bit, and then that ATR just provides me wonderful support. There's the earnings, I'm out of there, but I'm back in here at 246. And do we get out here? Let me just zoom in. No, we're not there, we're not there. We finally hit an exit here at 368. So now you can see Micron has been in a bit of a channel waiting for a breakout here. Okay, any questions so far? Okay, so let's go back to this problematic area here and zoom in on this. I'm going to show you exactly how I stayed out of this area here. Okay, so remember let me just bring this back in. Remember our 3 rules here: look and scan for long setups, assess support and resistance. So this is where point number 2 is key. When I get a long signal, the one assessment that I want to make before I consider any new position, let's ignore the 150-day SMA for now, is I want to see a new long breaking a previous clearly defined pivot high in the direction of the trade and above the ribbon. Okay, that's a lot of gobbledygook. Let me say it again. When I get a long signal, I want to see it take out a previous pivot high above the ribbon. So in this case, our previous pivot high above the ribbon comes in right around there. Okay, so this one is an easy one. At this point, I'm not even close to taking out a previous pivot high. So I ignored this trade. Okay, wait for another one. What happens though in this case is I've now established a new pivot high here. Okay, so let's draw that down. There we go. And I'll zoom in for you here. Let me know if you can all see it okay. So you can see this kind of comes back to the ribbon, goes up, never breaks that new pivot high that we established. But now we got a short trade. Do we take the short trade? We don't, because we're going to make the same assessment here. We're going to look for the previous pivot high. So this is the mirror of the long strategy. We look for the previous pivot low, below the ribbon, not even close. So pass on that trade. Next trade. Do I break that previous pivot high? And in this case, this one becomes a little bit more tricky. So there is the previous pivot high. We get there, we don't break it with authority. This is questionable. You could take it, but in my case, I want to see a clear breakout. And this one looks like we're finding resistance right at the level where I expected. So this is not a trade for me. This one here does become a trade. So this one, if we look and see our previous pivot low, comes in there. And this one I can make a case for taking this short trade here. So from 98 and change, we get to kind of go sideways for a bit and then gets closed out on this bar here at 108. So if you're trading this with options, this would be a loss. This new long is not a long because we haven't broken the previous pivot high, so we ignored this one. This short here, yes, it's broken that previous pivot low on this one here, but I don't take this trade. It's far too far from my risk tolerance area here. So from 89 to 103, that's a trade I stay out of. This one, same thing. We need to break this previous pivot high, which we don't here. So now we've stayed out of what, 5 out of the 6 bad trades. Here's trade number 6 that we're going to stay out of because we don't break that previous pivot low. Here's trade number 7 that we stay out of because we don't break a previous pivot high. Trade number 8 that we stay out of. Trade number 9 that we stay out of. Trade number 10, this one, once it gets this far, this is a very personal choice. Do I want to take this trade with a risk tolerance up to the ribbon from 84 to 99? I don't. It works until it doesn't. And then we're back to where we started. So in this case, your question should be, why would you take the trade here? You haven't broken a previous pivot high like you suggested, and you'd be absolutely right. In this case, what I want to do is either break this pivot high here, or now that we have established a new pivot high there, that's the level I need to break, and look at this beautiful bar here. Clear breakout with authority. There is my trade there. And from 102, even if I didn't take any profits along the way, I'd be at 419 right now. So if I didn't do anything, if I just shut my computer off, didn't look at a single chart for 10 months, I would have gone from about, what is that, about 100, call it 100, 102, over to 419 or so. How many of these trades would I need to have a really good year? Not many. Not, you could actually live off this one trade here. Let's go over to some of the indices. Let's look at the Qs. They're a little bit more volatile, which we want to deal with here. So these are all drawings that I put in for our members as we've been assessing the Qs over the last little while. And I've been saying for the last 3 weeks, I'm not as optimistic that we're going to get to all-time highs again. I think we touched the bottom end of this ribbon first at 587 before we test all-time highs at 635. We got close. On the NASDAQ futures, we actually ripped through the ribbon on Monday, and then of course had that massive recovery on Monday. So going back to the NASDAQ, going back to our last entry, so there's Liberation Day, okay, and same kind of assessment here on Liberation Day. Do I take this trade? No, I want to wait for a break below a previous pivot low, which is way down here, so we don't take that. But what have we done here? We have established a new pivot low right there. Okay, does everyone see that? There. Now, we get close here. I don't like the close of this bar. We get here. Now, this one here, this is a trade I may consider. 448 up to 499. It's about 10% or so. And you can see this one kind of gives you a nice easy trade right away, going from 450 down to a low of 403 within 2 days or so. So even if you were trading this with debit spreads that are 60 to 90 days in the future, you would have made good money on this trade. And then of course we come right back up, nothing happens. Then we get that long trade that happens right here at 488. Now I could cheat and I can say, you know, and if you think about where we were just past Liberation Day, which happened on the 2nd, and right now we're on the 2nd of May. If you recall, if I could take you back to that time in the market, there was all this almost daily news over what the tariff rates would be, how they would impact productivity, how they would impact imports, how they would impact consumer prices. So this was not, for me, at least at the time, this was not as clear an entry as of course it looks now. So the clearer entry for me, if I didn't want to take this one, now the benefit of taking this one, so let's talk about the risk reward here. The benefit of taking this trade is that if I get in at 487, my stop loss is at 475, which is less than 3% for my entry. So I may have taken a shot at this trade just because my stop loss was so close by, and I know that we've had consistent higher lows and higher highs across the series. So let's show them here. So there are our higher highs. We don't have that one yet, but and there are the higher lows. So we're in an upward trending channel. So I would have taken this trade, and I think we actually took trades in this area on, so go back here to April, and what did we do? Mag 7, it's a 5x leveraged ETP or ETP that trades on the London Stock Exchange. And this is basically the NASDAQ with a 5x leverage and the Mag 7 with a 5x leverage. And we bought these for 41 cents per share and 6.95 per share. And you can see some of our exits here, 104, 1508. I think we also had another one at 20. There's the Mag 7. So remember, we had bought this for 6.95 or so and exited at 33.43. Exit partial position at 33.43. So the distance to the stop loss for me is very important in terms of one, how I want to structure my trade, and how I want to take a trade that may not be an A plus on the technical setup, but there is enough there. There is enough there that I don't want to miss out on what turns out to be a gain from 487, where we currently are at 607 in the span of about 12 months or so. So as the position is starting to move, I'm adjusting my options. So SLV is actually a very good example of this here. Our first SLV trade was on the 15th of April, and the price of SLV at the time, we weren't documenting the prices, but we can look. So April 15th, and it was the 30/40 call debit spread. So April 15th. So we were well ahead of a lot of other traders in terms of anticipating the breakout here on SLV. So April 15th. There we go. So the price 29.40, and there's the long on 29.40. Technically, is this a 10 out of 10 trade? No, I'd say this is probably a 9 out of 10 trade. And there's that same assessment that we make, even though we haven't broken a previous pivot high, and I've drawn in the line for a previous session here. Look at my stop loss is so darn close. If it turns out that I get stopped out, fine. I can lose 7, 8, 9, 10 of these trades, because when I get a winner, I'm going to get something like this. So I go from 30 and I get to a high of 120. So let's see what we did on SLV. So let's do this by, sort this by column B. Let's see what we did on SLV along the way. So you can see here are our entries and exits. So April 15th, we closed that trade out on June 2 for a 22% profit. Reopen on June 2 at the 32.42 call debit spread, close that out for a 23% profit. The next trade 50%, the next trade 100%, the next trade 200%, 53, 96, 54, 37, all the way down to the current trade that we have. We have not had a losing trade on SLV in over a year. And that makes me very happy, because my macro thesis spoke to the rise of metals and hard commodities, gas, natural gas, oil, gold, silver, copper, rare earths, So this makes me very, very happy that the thesis played out exactly as we had predicted. And you can see these are not high risk plays. $1.74 that we paid for a 10 wide call debit spread. Because I knew that if silver really starts to run and there's a bit of a short squeeze that does happen, this 10 wide spread at $1.74 is going to turn into a lot of money, and it turns into that. And we're rolling these along. We're not waiting for these to go fully in the money, and we had lots of time. This is in August, and we had these January expiries. So asymmetric gains, that is what we're looking for. And the market, fortunately, offers us a lot of instruments to be able to do that. Go back. And this is not this is a high risk play. But because this thing was trading at, I think 60 some odd dollars, was down 90% on post-liberation day. I know big tech is not going anywhere. And I know over time, this thing is going to come up. So this was more of a longer term projection. And it just turned out that instead of being able to dollar cost average and buy more shares, I never got the chance because this thing just ran up so quickly. We took profits at 15, then again, I think we showed at 33 and change. I beg your pardon. So these are the kind of trades that we're looking for. These are the kind of trades that we talk about every Monday, Wednesday, Friday in our live sessions with me and Vince. We've got a wonderful group of other traders in the group that have a variety of experiences. It's probably a few hundred years of experience in that group, and you're going to learn a whole lot. You're going to learn what works for you, and you're going to be able to take the concepts that we have and apply them to your trading.